Okay. Okay, great. Good morning, everyone. Welcome to Real Estate 101. We have a small group today. We're here with Nayuka Robinson. She is an insurance broker agent with the World Financial Group. She has a lot of knowledge in the real estate and insurance industry. She is a consummate professional, and we're so thankful to have her here today. Naoka, welcome.
Thank you so much for having me, Kemba. I am super excited to be here to connect with you and your audience and to share with you more about how you could use insurance as a tool for real estate investment. But before we jump into everything, let me share with you a little bit about myself. Yes, I am a licensed insurance agent, but I am so proud to also be a financial educator. What that means is I don't just sell insurance. I provide people with financial education on key concepts that will help them to change their financial reality. We do a financial health check before jumping into anything, making sure that you are on track to being wealthy. And yes, I said that, being wealthy. I mean, for me, in the financial service industry, doing that financial health check means that you are not trying to be healthy, but wealthy, right? So you need to have that fundamental understanding of the things that you need, your prescription for wealth, right? That is the entire idea about doing that financial health check while building your financial home. I am licensed in Ontario, Quebec, Alberta, and Nova Scotia. I'm also getting my license in BC, so I'm able to help people across Canada. It doesn't matter where you are, even if I'm not licensed there, I can still help you. And one of the other beautiful things is that I don't just help individuals who need life insurance for personal coverage, but also business owners and investors. So there are so many ways that I can be of support to anyone who needs help after this session.
Amazing.
Um, in,
So
in,
Naoka, before you get into the presentation, I'm just going to share a little bit about the OFC and the Keen Group, and then I'm going to turn it over to you so you can get into it.
Awesome.
Yes. So the OFC is One Full Circle, and they are a melanated community. They reach out to community members, anybody with melanin. So it's a wide range of community members who will come in, and we share our resources. Today, the head of the OFC is not able to be with us. He's on holidays this month, and he's taking a well-deserved break. But usually he would share about the OFC. They're a wonderful organization, bringing people together to support business and community, primarily building up the community to learn and to grow and to succeed together. So that's the One Full Circle. And in collaboration with the One Full Circle, we are the Keen Real Estate Group, and we offer financial support in terms of we educate people to help them build wealth in real estate. We're presenting to you from the Keen Academy today. We're adding this into the Keen Academy Real Estate 101, and it is to help increase knowledge and increase wealth among melanated people, our community. We're excited to do this series. We're excited to have everyone come in and learn. Today's topic is real estate and insurance. And there's different ways to use insurance to build wealth. Naoka is going to be talking a little bit about life insurance and how you can actually leverage that life insurance as an investment tool. We also have Dr. Alvina Ryan. Unfortunately, she wasn't able to be here in person, but she pre-recorded a message for us, and so we're going to hear that message as well. But really, we have Naoka here, who, as she said, is able to support you across Canada, and in Quebec, in BC, in Ontario, all over. And so that's wonderful to be able to have that Canada-wide support. I'm not going to take up too much more time, but again, we from the Keane Group, we're here to help you with any of your investment needs, whether you want to buy a property or whether you want to just invest and whether you want to learn. So let's get started. Nayoka, thank you again for joining us. And I'm going to turn it over to you. You can share and get started. Oh, Nayoka, you're muted. Can't hear you.
I'm just too excited to get started, Kimba. I was saying thank you again for having me. I'm going to go ahead and start sharing my screen and get into the juicy details of today. It's very exciting when you're investing in real estate, right? But sometimes there are things that come up and we don't necessarily have the answers to that. So today, my goal is to help us, help everybody here to explore some real options that can allow you to break into investing in the real estate market. And you may be like an insurance agent investing in real estate. How do they tie together? And that's some of the things that we're going to answer. And Kemba, if you could just indulge me for a moment, I have a couple questions. And the first one is, what are some of the challenges that you believe are faced by real estate investors? Whether it is that they're buying their primary residence or they are an actual investor that is buying multiple properties.
I can say that I know of 3 top challenges people have. One is access to information and understanding what the process is and being not fearful of the process. Another is access to the actual investment opportunities that are lucrative and good investment opportunities. And the third, I would say, is definitely access to capital and the ability to actually get the money, whether you're getting a mortgage or a down payment, but all that capital that you need that allows you to get into real estate. Sometimes that's a challenge for people to actually get those things. So knowledge, capital, and what did I say the other one was?
Access to the actual property.
Yeah, exactly.
Yeah. So thank you. I love those answers. Those are real issues, real challenges that people are facing today. And I want to expound on those challenges a little bit. Yes, there's sometimes it's hard to find the information. And when you do find the information, sometimes it's hard to digest, right? So let us look at some of the other challenges that may be present in the market, right? Market volatility. You may have a negative cash flow, high cost to finance, loans, and we'll talk about some other things. But if we look at these 3 things that are on the screen, right? Sometimes the market's up, sometimes it's down, and some people are trying to time the market in order to get into the market. And on my side of things, we say, don't time the market. You need to spend time in the market. There's no perfect time. Once you have an opportunity or the access to get into real estate, go ahead and do it right away, right? Another issue that people may be facing is negative cash flow. And I see this every day with some of my clients. What happens is that, you have that desire, that ambition, that goal to get into the real estate industry, but you may have a high amount of debt versus your income, and you don't necessarily have the cash flow to service a real estate investment, especially in a recessionary market. That is tough for everyone. And I can imagine just how hard it is for anyone trying to get into the real estate market. Then there's a high cost to finance a loan, right? There is right now, the banks have the upper hand, right? They can set their rates wherever they want to because they're trying to protect their money. They're trying to make sure that they have enough capital on the back end to secure all the loans that they're giving out, right? So it is a little bit harder to get money these days, right? And even if you do get a loan from a financial institution, it may come with a higher interest. Then there is increased debt and liability. Getting into the real estate industry, or as an investor in the real estate market, you are taking on additional liability or additional debt, especially if you're going to be taking that loan, right? So this is where the fear comes in that Kemba talks about for a lot of people. They're thinking, am I going to be able to afford it? Is the bank going to foreclose on my home? Am I going to have to give up some of the things that I have in life now in order to be able to afford getting into the real estate market? And that is not necessarily the case, right? There is hyperinflation, which can also be another challenge, lack of liquidity. And I want to talk about the lack of liquidity a little bit, because some people, when they think about investing in real estate, they think, oh my God, I'm going to put all this money that I've saved into real estate and I won't be able to pull it out right away. In the case of an emergency, I don't necessarily have access to that money, right? These are some real challenges. And there are so many other challenges that can come up when you're thinking about investing in real estate. Income uncertainty. As a matter of fact, I have a couple clients right now who are looking at buying a house, but they're like, I'm not sure if I'm going to lose my job. A lot of people are being laid off right now. So they are, a little bit hesitant, a little bit cautious about getting into real estate because they don't want to lose their home after taking that risk, right? And then when you are getting a loan, there is always financial underwriting. The underwriters will go, they'll do their investigation, and then they will determine whether you're qualified or not. By the way, guys, this happens whether you are pre-approved or not for a loan. There is a possibility that after you find the right place, that you don't get into that place because the underwriter in the end decides that, hey, I'm not going to approve you for this loan. Right? Like Kemba said before, access to funding can be a real challenge. You may be ready, you may have your down payment, you may have a wonderful job and you're ready to take on that risk. But guess what? It is harder and harder to access that mortgage, right? Increasing rates, limited inventory. When it's a seller's market, when it's a buyer's market, sorry, there is a lot of rush on getting a house, right? You'll have hundreds of people bidding on the same house. Something that's listed for 500,000 all of a sudden is being sold for well over $1 million because of bidding wars, right? So when we're in a market like we are today, this is a real challenge. And the last thing, we want to make sure that we're purchasing something that is accessible, right? Right now, one of the big challenges, especially in the GTA, and I'm finding that from some of my Quebec clients as well, is finding a property that is affordable to them. But we've talked about all the challenges, or most of the challenges, that can be faced in the real estate market. Why am I bringing this up? This is hard for anybody to hear. I don't want to think that I'm going to be investing in real estate and facing all these challenges. I'm sharing this with you because I want you to be aware of some of the stumbling blocks that you can come upon. And I want to show you that you can address these challenges. You can afford your home with permanent life insurance. So if you are someone who has had the privy or the ability to get some financial education before, and you have permanent life insurance in place, maybe 10 years ago you got something and now you are ready to invest in a house, you can harness the power of that life insurance, right? Permanent life insurance offers investors like yourself an opportunity to build wealth while protecting your investment and your estate. So you have a cash value that you can harness. You are protecting your mortgage. So if you pass away, the house is not foreclosed on and returned to the bank. And I'll give you a real example of this. I have a client who his grandmother died and she left a house for him because she wanted him to have a solid foundation in his early 30s. And she didn't have a will in place. She didn't have insurance. She didn't have any estate plan at all. And the guy was super happy. He now has a house, but guess what? He had to pay a lot of taxes in order to get that house. Full disclosure, that client is located in Ontario, and the laws in Ontario are a little bit different from Quebec, but this is a real thing that can happen anywhere in Canada, right? He had to pay all these taxes and couldn't afford it because they did not have the plan, right? So that house was foreclosed by the bank and he had to sell the house. Yes, lost a lot of the money that he got from the sale of the house in paying for capital gains tax and all these other taxes that came up after his grandmother died. And in the end, he did not have enough money for a down payment on his own home. Go ahead, Kemba.
So in terms of how would there be any difference with how that would happen in Quebec? Like in terms of if he were in Quebec with that house, would there be a difference?
Yes, definitely there would be a difference. So the major difference here between Quebec and Ontario is that Quebec does not charge probate fees. And that's where the large tax came in Ontario, where in Ontario, when you pass away, all your assets go through what is called probate. It's where your estate is taken to the courts essentially, and the courts assess the value of your estate, and then a tax is charged on your estate. In Quebec, there is no probate tax on that your property would go through. But there are a lot of restrictions and requirements on the transfer of property in Quebec. And the best thing is to make sure that you have a will, no matter where you are in Canada, but especially in Quebec. And please note that in Quebec, you can't just write your will on a piece of paper or napkin in the restaurant and say, okay, this is my last will and testament. It has to be a legal document that is signed by a notary. Quebec is one province that does require that your will is notarized, where in other provinces you could just literally scribble your will on a piece of paper and that's legally binding, right? So the major thing in Quebec is to know your estate plan, know who you want to transfer your property to, and put those plans in place ahead of time. All right, so and go ahead, Kemba.
No, I was just saying thanks for that. That helps.
Yeah, these are some very important things to know. And I was going to put that in the presentation today, but I chose to kind of stay a little bit more high level and say that we could actually have a whole nother conversation about estate planning when it comes to insurance and real estate. But it's a real thing, and some people lose their assets, or some families lose their assets, especially real estate, to family members or to the government or to an unsuspecting person. Who knows, your spouse may have initially done a joint purchase with somebody who you don't know. So these things are very, very, very important to consider when you are purchasing a property. But when we go back to harnessing the value of an existing life insurance, it also allows you to borrow money while preserving your current cash flow. So we spoke earlier that access to money, having a proper cash flow for after you buy the house to still be able to live the life that you want, that's a challenge, and that's something that's very important. The cash value in your life insurance allows you to maintain whatever other investment you have, whatever other savings that you have, or it provides you a nest egg for emergency purposes, right? using the cash value of a permanent life insurance also allows you to reduce risk overall, right? You're not taking on any loans. You're not taking on a loan that is not guaranteed or collateralized, right? You now have access to your own money. Basically, you're creating your family bank. So you are the bank that you are going to get any money that you need in terms of accessing that life insurance cash value. And this may all sound foreign to you. So I just wanted to show you guys what are the different types of life insurance so that you can understand exactly what I mean when I'm saying harness the value of your life insurance and the cash value and all of that. Go ahead, Kemba.
Can you say that again? Did you say I'm the bank?
Yes, you could be the bank, Kemba. You could be your own bank. That's the idea of having a permanent life insurance. And that is what I'm going to dive into. And I'm going to show you guys real life examples, protecting the identity of my clients, though I took a screenshot of 3 different types of life insurance. And I'm going to show you what those 3 different options are: term, whole life, and universal life.
Awesome. Okay.
All right. So I get excited when I talk about the different types of life insurance. I feel like people need to know, right? This is information that we need to have. Kemba, on mute. We're going to have a little chat.
Let's go.
What do you think are the 3 main things that affects the cost of life insurance?
Your age, your credit, maybe, and your health, maybe.
All right.
The sex also.
I love Caroline. Yes, thank you so much for throwing that in there. So you guys are right on the ball. So I will strike out credit. Credit does not affect your cost of insurance, actually. But the main things that affects the cost of insurance is your age. Age is number 1. Number two thing I wouldn't say is sex. Number 2 thing is your smoking status. And guys, please don't judge my handwriting. If you're a smoker or a non-smoker, it will significantly impact your cost of insurance. The next thing that will affect your cost of insurance greatly is your sex at birth. Now, if you have changed genders, that is fine, but the insurance company will still consider your sex at birth as the primary sex for your life insurance, right? So those are the 3 main things. Now, when we talk about the cost of insurance and getting into insurance, why do we want to know what are the 3 different types? Well, it's like renting versus buying. Kemba, what's the main difference between renting a house and buying a house?
You get equity, you get income, you get a place to live in all cases, but for sure when you buy, you're able to build equity, and it's a wealth building tool, versus when you rent, you don't have those benefits for sure.
Kemba, you are a gem. I love the way you put it. So you're building equity. Oh, the first thing is you have a place to live. So the insurance is not a place to live, but it's a place that will provide you security, right? Then you're getting equity. You have that ownership. You're building value. You're creating wealth. That is the difference between having temporary life insurance and having permanent life insurance. The temporary life insurance, which is term life, is like renting a house. And permanent life insurance, which is whole life or universal life, is like buying a house. You have that equity, you have that security, you have ownership. And I'm going to start by explaining the term life first. When you're renting a property, can you go to your landlord, Kemba, and say, I'm sorry, but I've paid you for 20 years. Can I get some money back?
No, you can't.
Exactly. So the term is the same thing. You pay into that policy for a certain period of time. Here I have examples of 10 and 20 years. Let's use a 20-year example. You pay into that policy for 20 years. At the end of 20 years, there's no equity, there's no refund, there's nothing for you to get back, right? You just invested to make sure that you're safe for that time. Okay, at the end of the 20 years, would you be the same age as the beginning of the 20 years, Kemba?
I wish.
Right? We can dream, we can pray and hope and all these things, but we would definitely be 20 years older.
Yeah.
So if we said we were 30 at the beginning, by the end of 20 years, we would be 50. Right? So automatically the cost of insurance increases, and that happens every 20 years. And the thing about that is that as you get older, you're becoming closer and closer to debt. So the insurance company is taking on more risk, which I will show you an example. The cost significantly increases, but there's also another issue. You may not be as healthy at 80 as you were at 30. So now you may not even qualify for that insurance, right? So you're looking at being retired, not having enough money to maintain the insurance policy, and having a huge bill. I'm going to show you the example. This is a 39-year-old male who got a very affordable term insurance, $45.84 for 25 years. Sounds good, right?
Mm-hmm.
Amazing. Now, after 25 years, Kemba, what do you anticipate that he would be charged for this monthly premium?
So he's getting a new policy after 20 years?
Same policy, just that the cost increase.
I see. So his term has come and now he's just extending it for another 20 years. I would say it would triple. You think it would triple?
Yeah. I'm asking you, so you think it would triple?
Maybe. I don't know.
All right, let's go with triple. Look, in 25 years, this term now becomes $406.13.
That's more than triple. That's almost, is it 10 times? Is that 10 times?
Right? Right. It is almost 10 times. Right?
Wow, that's a lot.
So significant increase. But look, for the next 5 years, he's paying that. After those 5 years are up, he is now seeing a yearly increase on his premium.
Mm-hmm.
And it continues for as long as he lives. Imagine being age 88 and paying $4,500 monthly for your premium on your life insurance policy, just to make sure that you're transferring the value of your estate. Many people say that I would have canceled this after the first increase, which means that you are losing out on the benefit of transferring wealth to your family from generation to generation. And that's understandable. This is a high cost. One of my clients said, Nayoka, I would have a heart attack by the time I got to age 73 because it would just be too much, right? Term insurance is good. You're getting into real estate and you have a mortgage. Having a term life insurance will protect your mortgage, ensure that if you pass away, your family members will get that money rather than the money going to the bank. Now, they could pay off the mortgage. They could pay any taxes that are owed, any lawyers' fees that need to be paid. They can pay all of that stuff. But remember, there's no ownership in the term policy unless you get one that is really great, but it's expensive to keep long-term, right? What I want you guys to think about outside of the term policy is the whole life and the universal life policy. Now you have ownership, you are building a cash value, and you can also transfer ownership if you want to, right? The whole life policy is looking like this. So you have your cash value. Once you invest into this policy, a portion of it is invested in the market for you, and you're building equity in your policy. So not only do you have your monthly investment that covers you if you should pass away, now you have an investment portion as well. And there's also dividends that are paid to you on an annual basis, depending on the company. Now, we saw where the last policy, the cost increased year over year, but this policy, your total coverage amount is the one that will increase. The structure of this policy, the client was covering a mortgage. So after her mortgage period is ended, that coverage amount falls off and she has her permanent life insurance. But if you pay attention to the dividend payments, every year you are getting, annual dividends over here, you're getting annual dividend payments, and you are not paying into this policy for your entire life. This whole life policy was structured for the client to pay for 20 years and have coverage for her entire life, still get dividend payment, and still have a growing cash value. So it's like the house, you pay off the mortgage after 25 years, the house is still yours, the value is still increasing, and you are just having that wealth or that investment that is yours that you can do whatever with. If you already have a permanent life insurance, this is money that you can access for the down payment on your home. Just 1 second, and I want to quickly show you the universal life policy as well. Same thing, you invest into the universal life for 20 years, and I'm using 20 years as a universal example here, and you have a cash value associated with that universal life. And throughout the life of that policy, you see your death benefit continues to increase year over year as well, just like the whole life policy. So not the term policy, your coverage amount stays the same. With the whole life and the universal life, that amount that you're leaving for your family increases as time goes on, but the cash value, that investment portion, also increases as time goes on. And this is something that you can access during your lifetime so that you can buy your property, go on vacation, pay for renovations, rent a hotel while you're transitioning from home to home, whatever you want to do with it, that money is yours to access.
Yeah.
Now, one of the big questions, let me just show you this real quick to wrap up the different types of life insurance. So whole life and universal life, you have the ownership, you have the cash value. Whole life comes with guarantees on the amount that you're paying for your premium, the length of time that you're paying your premium, the coverage amount that you will get, and cash value. So you are guaranteed to receive a certain amount of cash value from the whole life policy. The universal life policy does not have those guarantees, but you still have the ownership, you still have the cash value. You get to choose your investments, and you have now a tool that you could use to do anything in terms of building wealth and helping to invest in other things. Now, one thing that people forget to ask when they're talking about these permanent life insurances is, how do I access that money? There are 4 ways to access the money in a life insurance policy. You can go to the insurance company and say, hey, guess what, Nayoka, I would like to make a withdrawal of $20,000 from my insurance policy, and we could discuss how you could do that withdrawal. The second way is to do a policy loan. A policy loan is going to the insurance company again and saying, hey, I would like to take a loan out against the value of my cash value. And that loan would come directly from the insurance company. You can repay that loan within your lifetime, or the death benefit can repay that loan for you after you pass away. The third way is to do a collateral loan. Instead of going to the insurance company, you go to Scotiabank or BMO or RBC and you say to them, hey, I have $1 million in my cash value of my life insurance policy. I would like to collateralize that life insurance policy to make a down payment or to purchase a house or to start a business, whatever you want to do. They will help you with the process of accessing that money. And then the last option is immediate financing. These are for our wealthy investors who not only has a large lump sum of money upfront that they want to invest in a property, but they also have the cash flow to support their investment. So for example, let's say you have $1 million cash, you want to buy an investment property or your own property, whatever you want to do with it. You can invest that money into a life insurance policy, get an immediate financing arrangement, and that immediate financing arrangement will give you back that $1 million that you invested in the policy so that you can now go and purchase your home. So you're growing interest on that money in the life insurance, because if you saw the example, there was a return rate of 6% that increased year over year to 7.58% as a bonus for those who maintain their policy. The immediate financing arrangement does the same thing. You invest that $1 million, it's growing year over year, and you're still able to invest in a house that is also building equity for you. So that $1 million that you have is now growing in two separate places. This is for a very avid investor, somebody who understands investing very well. So I wanted to break down those three things for you so you guys understand who suits which option best. So the policy loan is for somebody who may need a little bit more money to make the down payment on their home. You go get a policy loan from the insurance company. Let me just backtrack a little bit. The withdrawal, I would say if you need a couple $1,000 or a couple $100, go ahead and do a withdrawal, which is why it's not here. It's like going to your bank account and taking some money from your account. There's a lot more to be said about the withdrawal, but we're not going to dive into that today. If you need more information, you can come to me. I'm here to give you guys high-level knowledge. If you want specific education on different things, I can provide you with that. The policy loan, however, if you're looking for, let's say maybe $20,000 to add to your down payment, that could be a good option, right? If the insurance companies prefer for you to repay the policy loan, right? This is also good for someone who may have already applied for their mortgage and doesn't want to take on another loan. You don't want to go to the financial institution, or you may not be able to qualify based on your financial situation. You can borrow up to 90% of the cash value of your life insurance, and they want it to be short term. The collateral loan, this is for a larger sum of money, like I was indicating earlier. You can qualify for a loan with a financial institution and you're comfortable with debt. You can borrow up to 100% of your cash value, depending on the financial institutions. And the best thing about collateral loan is that the proceeds are tax-free. The withdrawal and the policy loan, they attract tax, right? The collateral loan does not attract tax, it's completely tax-free. And then the last one, the immediate financing, is exactly like the collateral loan, but again, it's for the wealthier client who has a large lump sum to invest, wants to secure that cash that they have, and have additional cash flow to back up that investment. So you have to go through more financial underwriting or testing or questions to get the immediate financing arrangement. That's it, guys. I know you learned at least one thing today, and I want to leave this with you. If you don't find a way to make money in your sleep, you will work till you die. This is a way to help you to break the mold, get into the real estate industry. If you are already there, it gives you ideas of how you can protect your estate and do more investing. If you have any question, guys, my name is Nayoka Robinson. You can find me on Instagram, or Kemba can connect you with me for more information. Thank you so much.
Oh, Nayoka, that was amazing. I would love, love, love to learn more. I think that was very good. I enjoyed the presentation immensely. And yeah, I would love to learn more. So I would love to open it up to the audience as well to ask any questions. If you have any questions about the presentation or about any one of the types of insurance you learned about. Or Carlene, I know you're our question lady, so absolutely go ahead.
Thank you, Kimba. Thank you very much, Nayoka. I've learned so much because I myself just changed my life insurance for permanent. I did it late, very late, but my life insurance is really young, my permanent life insurance. So I cannot do anything. I cannot take any money, right, from it.
If there is a cash value, depending on the company, you may be able to access the cash values. It's all dependent on the company. But when you say young, what do you mean? How long have you
Like
had it?
2 years.
All right, so 2 years, you're kind of in the spot where your policy is starting to gain that momentum of building that wealth. You can access the money. My recommendation, don't touch the money until you are at year 5 or year 10.
Okay. One other question I have. So it's only with the permanent life insurance that we can do that, not with the whatever life insurance we have. Because I have a bunch of life insurance that I need to combine to just have one life insurance because I have all over the places. But I cannot do anything with this money? No? Yes?
You know what? I think it would be good for you and I to sit and look at all the life insurance policies that you have, because there may be a policy that you're thinking is permanent, but it's temporary, or there may be something that you're thinking is temporary that's permanent. So doing an evaluation of your personal situation, I think would be ideal, so that we could see if there's anything that you could harness out of any of those policies.
I also have another question. Bear with me,
Mhm.
please. My kids, I remember back in the time, they used to offer that permanent life insurance for young people. So at the age of 50, you can retire. You no longer pay. But they stopped that thing because I couldn't have it for my kids like 5 years ago.
Caroline, I hope I'm saying your name right. You are exciting me right now. So the younger you are, the better it is for you in terms of getting a life insurance. As a matter of fact, a baby that is 15 days old, I said it, 15 days, not months, not years, 15 days old, can have a life insurance policy. Imagine you getting life insurance coverage for your child that young. And like Caroline said, when they get to age 20, you're able to pay for school for them using their life insurance policy. When they're ready to get married, you're able to pay for the wedding. Getting their first house, you could do that. When they retired, you could do that. When it comes to a child, if you get a permanent policy for them as soon as they're born, you could literally set them up for financial freedom right away. And this is something that wealthy people do. We are able to structure your policy so that at every milestone, your child is able to get money. Think about your child going to school, and every year that life insurance policy is paying for the child's tuition.
Wow.
Mm-hmm.
That's
But they didn't want to cover my two oldest permanently. because of a situation of my husband. I don't understand that part.
Okay, that shouldn't be the case, but like I said, let's talk and review your situation so that we could see what you could do for yourself and your kids and your husband as well, your entire family.
I'm ready to take the phone number.
All right, so this is what I will do for you guys. I will put my telephone number in the chat. 613-296-8372.
Perfect. Thank you very much. Thank you very much. It's very, very well, a lot of knowledge. Thank you. Thank you, Kemba.
You're welcome.
Thanks,
No
OFC.
No problem, no problem. Thanks, Carlin, for your questions, for joining us. I appreciate the time everyone is here. We started a little bit later, so I just want to wrap up with, we had another guest who was supposed to join us, so I'm going to get into her presentation. It's only going to be 10 minutes. She's talking about another aspect of insurance, which is related to property and damage insurance. So Naoka went through life insurance, which is like a huge gem. And just even Naoka, if you had started with the fact that I could insure my kids at age 15 days, you know, I'd be sold. Let's go. So that's a great golden piece of information to know that they can start so young. The policy prices would be a lot less. It sets them up for life. We talk about generational wealth all the time. So this is hugely exciting for me, and to get started with them having policies that are like that, which will help them at such a young age. And even if they can't read yet, they have something to go on in life. It's amazing. And this is the type of stuff that, you know, as a company, we want to share with people to say, hey, these are the things you can do for yourself, for your family, for generations to come, to help us, you know, just get ahead and not constantly be struggling and behind. So thank you, Naoka, for that. Thank you for the presentation. I think it was amazing. And as you shared your email, please reach out if you guys want to contact Naoka and set up a meeting, discuss your life insurance policy and any other life insurance needs that you might have, and take advantage of the opportunity to maybe use life insurance as a tool to build wealth. If you've bought real estate already, great. You might be in the category of being able to do is it an IFA, immediate financing? You know, you might have that opportunity, or you may be building towards that because your business is allowing you to have the capital and the cash flow to do it. So really just consider that. It's a great opportunity. So with no further ado, I'm going to go on to Dr. Alvina Ryan's presentation, and you guys bear with us. We'll be going on for another maybe 15 minutes and then wrapping up. And if you have questions along the way, please just raise your hand, put it in the chat. We'll stop and we'll answer your questions. Okay.
Welcome, Dr. Alvina. Nice to have you. Thank you so much for coming and, you know, doing this with us today, being on Real Estate 101. We welcome you. I'll turn it over to you just to say your hellos.
Well, thank you very much, Kemba, for inviting me to Real Estate 101. And what you guys are doing, let me just say first and foremost, is incredible. And I'm just so thankful and honored to be invited as a guest.
Well, we're happy to have you, and we love what you're doing as well. You have a book, you're a published author. There's so much about you that we're honored to have you here as well. So let's get right into it. We're here today talking about insurance. And so we're starting with you, and just if you want to talk to us a little about what is insurance.
Thank you. So insurance is all about managing risk. So the reason why you need insurance is to prevent being in a financial hardship, really. There's different types of insurance. There's life insurance, there's damage insurance. So personally, I'm representing right now damage insurance, which is car and home insurance. And since this is a real estate program, it's property insurance, whether you live in an apartment or you live in a home or you live in a condo, that type of insurance is covered under damage insurance.
Okay, awesome. So this is, You mentioned if I live in an apartment, so I can get insurance if I live in an apartment.
Definitely. And what most people don't realize is it's important to get it in an apartment because you don't control what happens in terms of a fire. If something happens, the building goes on fire. The landlord does have insurance to protect his building so he could rebuild it, get money back. But what happens to your fridge? What happens to your stove? What happens to your clothes? Who pays for that? So GoFundMe is not insurance. You really need to make sure you have your own personal protections so that you could get your things back.
Amazing. Yeah, that's true. That's true. You never really think about it. I don't think tenants think about insurance, but it's a complement to the home insurance that a landlord would get. And so speaking of landlords or folks who own property, you mentioned there's property insurance. What does the process look like to get insurance?
Well, definitely you have to start with a quote. So you call an agent and you give them your personal information. So name, address, telephone number, birth date, all the standard stuff. You have to give them where you're living. You have to give them permission to review your credit because we do take into account your credit score. And then at the end of it all, you end up with a quote. And this quote is how much you would be paying monthly or yearly. I live in Quebec. So in Quebec, what we have is taxes. And I'm sure it's the same elsewhere, but I could only speak for the province that I'm licensed. So you have taxes that you pay standard, and then you have a surcharge, which is like a service fee. So if you pay all in one payment, you avoid that service fee. But if you pay monthly, then you will definitely have that service fee tagged on because there's administrative costs, basically.
Right, right. Okay. And how does it work when you're doing a closing or when you're buying property? How long does it usually take for insurance, like to get insurance? What are your tips in that process?
Well, my tip would be to do it early. So definitely you could get insurance. So I could post date up to 60 days. So if you knew you were closing on a home, call your insurance right away. Find out how much it is. Get that quote. You could even, as I said, you know the date of your closing when you're going to sign at the notary, you post it for that date. It's going to start that date. You do have to put a down payment to have the whole process looked at, but it will give you so much peace of mind knowing that you're approved. What often happens is people wait till the last minute or they forget about insurance. But what ends up happening is we might cover you if you are passing the quotes phase. We might cover you, but then they might ask you for an inspection. And then suppose that inspection doesn't go as you thought. So you'll be covered for only a specific point of time. So it's like temporary insurance instead of being covered totally, because when they evaluate you, they go to the underwriters. If the underwriter finds that there's too much risk, they might ask for more details. So the more time you have is better for you because then you know for sure it's guaranteed, or you're kind of in limbo, hoping, crossing your fingers, and no one wants to be in that predicament.
No, not at all. Not at all. So it's best to start early with insurance, just so you know what you're dealing with, that when you buy a property. I've been asked to provide an electrical, an ESA certificate for a property I was buying, and that took time. So it definitely sometimes when an insurance company comes back to you and say, hey, you're buying this property, you need XYZ, you need time to get those things so that you make sure you get insurance. Would they still insure you sometimes, or is there a potential the way you don't get insurance?
Definitely. I refuse people all the time. And it's not because I personally have anything to do with it, but it's just, it might be your credit. So these are the things that people don't understand. We're going to do that soft credit check. We're going to look. And if you have a tendency to be delinquent, you might be refused just because of that. So your credit score is super important, and a lot of people don't pay attention to these things, from 18 years old to the time, whatever you're going to buy your house. And so it takes time to rebuild it again. So again, these are reasons why you should just do it early. And when we talked about apartment or tenant insurance, having that is essential to building your credit because now you have years of experience. before you go to buy that house, which is, no one thinks about it, but it's super important.
That's a great tip. That's a great tip. And so, Dr. Alvina, how about you share some tips with folks about just getting insurance and what they need to prepare for, and what the insurance companies look at when they're insuring?
Perfect, thank you. So I would love to share those general tips. So first, I already kind of mentioned it, is the years of experience. So the earlier you get into the insurance game, the better for you. Think of it like a credit card. If you never had a credit card, you've never built any credit. So you need to get into the game early. Even if it's your first apartment, first condo you're renting, do it. You'll be paying minimal, but it's so worth it when down the line you have those years of experience. Also your claim history, you know, like some people, they, you know, a little thing happens and they claim right away. But you know, with insurance, you claim, insurance goes up. So think about what you're claiming. You might know a little handyman that could fix something, fix it. When it's a flood, big damage and all that stuff, that's what insurance is for. So definitely, if it happens to, definitely use it. But if it's something small, you know, think about it. Think about if it's worth it, because when you do that monthly calculation, it does add up. Your location, you know, when you're buying property, location, 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 that's the famous thing. So, you know, where are you buying this? Is the environment going up? Is it going down? Did you do your research? I mean, it's so important where you pick, because if there's a dépanneur, which is a cornerstone, sorry, I'm using my French terms. If there's a corner store nearby, you get a lot of foot traffic. Are you on a ground floor? Is there tendency to break in? So all of these little things change where you are in the insurance history. If you're a tenant and you're on the, you know, top floor, people are not walking in to break into your house. You know, that's not normal. But if you're in a condo and you're on the basement floor, they have right access to your patio door. So all these little things add into the history. Your credit, we talked about, super important, and the square footage, right? So yes, you want that huge, big house, but you're paying per square foot. So, you know, all of these things, and there's so much more. I can't even go on to all of the things, but these are just common things that you should think about. Because, you know, people say, well, I live on this street and my neighbor has this, and, you know, how come she's paying this? All of those things are different between you and your neighbor. Right? You might have the exact same house, but you have bad credit and she has good credit, you know. You know, she never claims, you always claim. All these things change your price. So super important to get your price. It's not about anybody else. When it comes to buying homes, it's all about you and what you've done and how you've invested in you, so that they think that you're not a risk.
And that can all factor into your costs, right? As an investor, we talk to people a lot about, you know, how you plan, how you analyze property and stuff like that. And people sometimes just put a generic number down for insurance when they're calculating, hey, I'm going to buy this property. It's my first, and here's what my monthly costs are going to be. But if they don't factor these things in and figure out, get good quotes, like you're saying, and figure out the insurance ahead of time, sometimes that can be a surprising number. That, oh, I didn't expect to pay that much for insurance, but you could have lowered that by being, you know, prepared ahead of time. So that's great.
Exactly. It's very important to be diligent. And I don't want you to get the impression that if you don't qualify, that's it. Like if you work with me, we have sublenders. So, you know, if you don't qualify, we don't just throw you out the door. We recommend that you go to these lenders. What happens though, when you go to those lenders, is you pay a little bit more. So again, it all goes back to how you've treated this from the beginning, because you want to pay the lowest rate possible, not the highest rate because you were negligent before.
Right. Great tips, great tips. So Dr. Alvina, I really appreciate the tips. I really appreciate the time and coming on with us. I would love for you to just share how people can get in touch with you, and then maybe we can let you go. But thank you so much for coming on.
It's my pleasure. Well, the best way to reach me for anything, because, you know, some people just want to have a conversation. They just want to ask a question. So I'm just going to point you to my generic website, which is my name, www.alvinaryan.com, and just press /contact. So www.alvinaryan.com/contact. And that way we will start the conversation.
Amazing. Thank you so much, Dr. Alvina. That was great.
My pleasure.
Okay. So guys, that was the end of the presentation. I appreciate you guys coming on. Do you have any questions? Actually, Nayoka is licensed in Quebec and Ontario, and she can maybe answer any questions you might have on the other aspect that Dr. Alvina shared, just because she wasn't able to be physically present today. No? Quiet house? Oh, Carlina, is your hand still up from earlier, or are you asking a new question? You're muted if you're asking.
No, it's not my hand. I thought it was Ryan's hands.
No.
I don't have any question.
Oh, okay. So your hand was still up. If anyone has any questions, now's your chance. And Nayoka, I want to wrap up to just give you an opportunity to share your information again. Appreciate you taking the time.
No problem at all. This was an amazing event. You guys have a gold mine here with Keen Realty sharing this education with you. You can jump so far ahead with the information that you have received today. Chris, I see your hand up.
Yes, hi. Thank you all for the information, the presentation. I had a question. Let's say if you had a group of friends and they each had their own policies, is there anything that would stop them from being able to use the cash value, invest, like pool their money together in an investment?
No, no, you can use your cash value however you want to. What would be interesting is how each person would access the cash value because the policy are independent policies, right? But yeah, you can access that cash value to do whatever you want to.
Okay, great, thank you.
You're welcome.
And that's a good thought, Chris. If everybody's, if everybody on this call went to get a policy, a universal permanent policy, I should say, not a universal, but one of the permanent policies, and we wanted to buy an apartment building together, it would mean that we're all going to see where our policy's at. And, even Dr. Alvina Ryan said it, and Nayoka said it, each person's policy will give them different payout amounts, different, it's never going to be the same for each person. So maybe not everybody will be able to pull out 100,000 from their policy each, but you have to see where you're coming from, and then you bring it all together and then you invest that way. So it's a very good thought. But again, the amounts would be different, or the policies would be different. Okay, and so just in terms of if you want to reach us, we have lots of educational programs like this that we offer. We offer individual exclusive coaching where you could work with us one-on-one, and we can look at your specific needs, and we can help you progress in real estate that way through the Keen Academy and through the coaching that we offer. We also offer group coaching and group courses where you can come and learn like this, and have very targeted information to help you, one, find investment opportunities, two, partner and collaborate and grow your wealth through real estate, and get in touch with partners like Nayoka and lots of the other folks that we have on these calls, and we'll be able to access the information that will really help you build that wealth that you're looking for. So reach out to us at Keen. We'd love to have you, and thank you to
I just wanted to share this slide quickly since you asked about sharing my information. So you guys have it. That's my cell phone number and my Instagram page. Please follow me on Instagram. You could always drop me a DM. My cell phone, I'm always available by phone. You could call me, text me, anything.
For sure. So take a screenshot too if you want to keep Nayoka's information. And just as a thank you to the OFC for collaborating with us and making these presentations possible and sharing with the community. Pharaoh, I don't know if you're on the call, not sure if you're in a position to share anything or say final goodbyes, but I'll give you that. Nope, Pharaoh might be in transit. He did say that he's on the road, so maybe he's not able to share. So guys, have a wonderful Saturday. Thank you again for joining us. We'll be sending you a little package of information as well as links to consider our courses and consider our coaching and any of the other services we offer here at Keen. Have yourselves a wonderful day. Oh, there's Pharaoh. Look at you, looking chill and relaxed. Nice.
Hey guys, hey. Sorry about that. Yeah, I just got to the retreat. So yeah, so peace everybody. I was listening in the car, so it's really awesome. Great presentation. Thank you guys again for what you're doing and for sharing all that awesome insight that the community needs. So I was glad to be able to be here and to participate. I didn't hear the last part that you had just said, Kemba. I just heard Pharaoh and I was like, oh, let me. So I want to say hey and send love to everybody.
Yeah, just giving you an opportunity to wrap up and share the OFC and just thanking you for the opportunity to collaborate on it.
Awesome. Well, yeah. So again, for those who don't know, so we are a community resource. So we are that 411 for the community, really focused on bridging between individuals, businesses, as well as organizations, between the French and the English speaking community almost all over the world. So I'm really glad to be able to have this. And actually, it's funny, we just got to the retreat, which is our healing retreat that we're setting up for people within the community to be able to get that additional help, mental, spiritual, physical. So we're glad to be able to have this space available to members of the community as well. And as you guys know, like we're here to build for the future generation. So it's to build economically for the future generation. So what we're doing here and discussing the insurance and discussing real estate, this is really it. This is how we're going to be able to build wealth for our next generations. So anybody who's hearing this and would like to become a member, who'd like to participate in more activities like these and other community building things, definitely reach out. The contact, well, the website's super simple. It's ofccommunity.com, or you can always reach us at 514-651-4545. So thank you guys again, and I'm sending you love, light. I ask that the ancestors continue to guide you guys, continue to protect everybody, and keep everybody in great health and great spirits. Ashe.
Thank you. Okay, guys, have a wonderful Saturday again. Best to our guests. Appreciate you guys coming on, and we will see you again. Our next event is Earn While You Sleep. We'll be sending out those links. It's happening April 27th, 7 to 8 p.m. Earn While You Sleep is a great series for you to learn how to put your money to work. So please join us for that as well. Take care, guys. Have a great Saturday.
Thank you. Bye, everyone.
Bye.
Thanks. Bye.